Hello, students! Today, we are going to understand a very important concept from our economics syllabus, modern forms of money and the banking system. You'll see it's much more than just the notes and coins in your pocket.
Let's start with a simple thought. Just imagine for a moment a world with no money at all. How would people buy and sell things? How would you get what you need?
Well, people used a system called barter. But look at this situation. A shoemaker wants wheat, but to get it, he has to find a farmer who not only has wheat to sell, but also wants to buy shoes at that exact same time. It's quite complicated, isn't it?
This essential feature of the barter system is called the double coincidence of wants. It's a very important term. It means both people have to want what the other person has. Think about how difficult that would make trade in our daily lives. So, money solved this problem. It acts as a medium of exchange that everyone accepts, but the form of money has changed a lot over time. Let's see how. In earlier times, money was made of things that had their own value, like grains, cattle, or even gold and silver coins. But our modern money, the paper notes and coins we use, well, it has no real value of its own. It's just paper and metal.
This brings us to a very important question. If it's just a piece of paper, why do we all accept it as a medium of exchange? Why does it have value?
Well, the first reason is that the currency is authorized by the government of the country. This government backing gives it authority and makes it trustworthy.
And second, it's issued by a single central authority. In our country, that authority is the Reserve Bank of India, or the RBI. The RBI issues currency notes on behalf of the central government. No one else is allowed to issue currency.
Now, this leads to the most crucial point. The rupee is our legal tender. This means the law makes it legal to use the rupee for payments. No one in India can legally refuse a payment made in rupees. That's what gives it power.
Okay, now let's think. Do we keep all our money as cash? No, right? Most of us use banks. So let's explore this second. Very important form of modern money.
People often have extra cash. For example, when someone receives their salary at the beginning of the month, they don't need to spend it all at once. So what do people do with this surplus money? They deposit it in banks. And this is a very smart thing to do. Why? Because first, the money is safe in the bank. Second, the bank actually pays a little extra money, called interest. And third, you can take out your money whenever you need it.
Because these deposits in your bank account can be withdrawn on demand, they are called demand deposits. Please remember this term. It is very, very important.
Demand deposits also offer a very interesting facility. You can make payments using a check. A check is simply a piece of paper that instructs the bank to pay money from your account to someone else. It helps us avoid using cash. Let's look at an example.
Here, M. Salim, the shoe manufacturer, needs to pay Prem Kumar, his leather supplier. So Salim simply writes a check for the amount. Prem Kumar then deposits this check in his own bank account. After that, the bank does the work of transferring the money from Salim's account to Prem's account.
And just like that, the transaction is complete. This shows us so clearly how a payment can be settled directly without any physical cash being used at all.
And this is the main point. Because demand deposits can be used to make payments through checks, they share the most essential feature of money. They act as a medium of exchange. That is why they are also considered money. So, let's put it all together now. We've seen two different forms. So, what exactly makes up the money in our modern economy today? The crucial point to remember is this. Modern money is made up of both currency, that is, the notes and coins held by the public, and the demand deposits that people hold in banks. Both are money. And you must remember the central role of banks. Without banks, there would be no demand deposits. And without demand deposits, there would be no payments by check. The whole system works because of the banks. Okay, for your exams, please remember these key points. First, money is needed to solve the double coincidence of wants problem. Second, modern currency has value because it is our legal tender authorized by the government. Third, demand deposits in banks also act as money. And finally, the banking system is absolutely essential for all of this to work. To end our lesson, I want you to think about this question. It will really help you revise what we have learned today. In your own words, how would you explain the role of banks in making our daily transactions easier? Thank you.